All right, Dave here, and today we're tackling a beauty giant that just had a major makeover of its stock price. We're talking about e.l.f. Beauty, ticker e.l.f., which saw a massive drop after its latest earnings report. Is this a cosmetic blunder or a beautiful bargain in the making? Let's dive deep and figure out, is the bottom in for e.l.f.? So, what's everyone saying about e.l.f. right now? Well, the market narrative is pretty clear. Ouch! Despite an earnings per share beat, the company's full-year revenue and EBITDA outlook really disappointed. We're talking about guidance that signals a noticeable slowdown in growth and some serious pressure on profitability. This triggered a sharp sell-off, with the stock basically gapping down. Investors are focusing on immediate headwinds like softer consumer spending, slower new product rollouts, and those broader macro uncertainties. Basically, the market is spooked by the slowdown. First, for those unfamiliar, e.l.f. Beauty Inc. is a powerhouse in the cosmetics and skincare world. They're behind brands like e.l.f. Cosmetics, e.l.f. Skin, Well People, and Keys Soul Care, selling everything from eye makeup to skincare across national and international retailers, plus their own e-commerce channels. Founded in 2004, they've grown into a major player. Now, here's the kicker. Their latest full-year guidance projects around $1.56 billion in revenue and $304 million in adjusted EBITDA at the midpoint. This new outlook is what set the market ablaze, as it implies a significant step down from their previous high-growth trajectory. Now, let's reconcile this market chatter with the actual numbers and company guidance. On one hand, e.l.f. undeniably has underlying strengths. They're still gaining market share even in a tough beauty category. Their international expansion is strong, and the Naturium acquisition is proving positive. But that disappointing guidance just can't be ignored. It indicates a very real deceleration. So, how do we model this? We've run three distinct scenarios for e.l.f. First up, the base case. Here, we're saying the market largely overreacted to this guidance reset. Yes, growth is slowing from those hyper-growth levels, but e.l.f. is still a strong brand. They're gaining market share even as the overall beauty category softens. International growth is solid, and Naturium is helping them in skincare. We think that Q4 guidance, which looks almost flat at -1% to +2%, is conservative, accounting for current headwinds. We anticipate a stabilization and a modest rebound to around 10% growth in the next fiscal year. The PE multiple will compress from its crazy highs, but it should find a floor given the brand's resilience. For valuation, starting from the projected FY25 revenue of $1.56 billion, if they grow 10% in FY26, that's $1.716 billion. Assuming a 10% net profit margin, we get $171.6 million in net income, translating to about $3.03 EPS. With a forward PE of 32x, which is a big haircut from current levels but still premium, our fair value lands at $96.96. We're assigning a 40% probability to this base case because the technicals show the stock is currently sitting right on critical support at $75. This scenario assumes that support holds, allowing the market to digest the news and eventually see the underlying value, preventing a further immediate breakdown. Next, let's talk about the bull case. This is where we assume the initial market reaction was a complete overcorrection. The Q4 guidance turns out to be excessively conservative, and e.l.f. adapts quickly to those softer consumption trends. New product launches really hit it out of the park, gaining traction faster than anyone expected. The core brand strength, their digital savviness, and international expansion, including full acumen, will see a much better growth rate. Integration of Naturium all accelerate. Those macro headwinds, like the TikTok uncertainty or tariff concerns, ease up. e.l.f. surprises us with stronger than expected revenue growth, possibly hitting mid-teens to 20% growth again sooner than anticipated, with resilient margins. For valuation, again starting with $1.56 billion for FY25. If they rebound to 20% growth in FY26, that's $1.872 billion. With an improved 12% net profit margin, we're looking at $224.64 million in net income, or about 3.96 EPS. If the market re-rates them higher to a 40x PE as growth re-accelerates, our fair value here is a robust $158.40. We're giving this bull case a 15% probability. While tempting, the stock would need to clear a significant hurdle above $130 to truly signal a return to an uptrend, as our technical analysis shows. And that's a big move given the current climate. Finally, we have the bear case. This is where the market's concerns are fully, painfully realized. The growth deceleration is more severe and prolonged than anyone thought. The broader beauty category continues to shrink, new product launches are duds, and external factors like TikTok and China tariffs really mess with sales and supply chains. e.l.f.'s market share gains slow or even reverse, and operating margins get squeezed even harder due to promotions and higher costs. That lowered guidance? It was just the first cut, with more reductions to come. Growth stagnates or even turns negative for an extended period. In this scenario, starting with FY25 revenue of $1.56 billion, if FY26 sees zero growth, that's still $1.56 billion. But with a significantly eroded 7% net profit margin, net income drops to $109.2 million, or about 1.93 EPS. If the multiple contracts further to a mere 25x, reflecting stalled growth, our fair value plummets to $48.25. We're assigning the highest probability here, a 45% chance, to this bear case because the stock just gapped down and is precariously sitting right on that critical 75 support. If that $75 level breaks, the next major support is all the way down at $55, which would just reinforce all these negative fundamental concerns and likely trigger a further sell-off. All right, let's pull up the chart and see what it's telling us. As I mentioned, e.l.f. just gapped down hard, and it's currently clinging to a crucial support level right around $75. This is a make or break moment, folks. If this $75 support fails to hold, the technical suggests the next significant support zone is considerably lower, down around $55. Now, to even think about resuming an uptrend, to get back to those good old days, the stock would need to convincingly maintain itself above $130. That's a long way from where we are today, marking a serious challenge for the bulls. So, is the bottom in for e.l.f. Beauty? My final verdict, combining our scenario analysis with those crucial technicals, is that the bottom is likely not in yet, but we're approaching a critical inflection point. With a 45% probability assigned to our bear case and the stock precariously resting on $75 support, the risk of further downside to $55 is very real if that level breaks. While the base case offers a potential upside to $96.96, the immediate technical picture is fragile. This isn't a clear buy the dip signal just yet, given the strong probability of further downside if technical support fails. Given our analysis, if you're looking for potential entry points for e.l.f., you need to be patient. If that $75 support holds, the base case suggests a fair value around $97. However, with the high probability of the bear case and the technicals showing $55 as the next major support if 75 breaks, a more conservative approach would be to eye levels closer to our bear case fair value of $48 to $55 as a potential true bottom should the negative scenario unfold. For a more immediate speculative play, holding $75 is key, but the downside risk is significant. All right, value hunters, if you found this deep dive into e.l.f. helpful, you know the drill. Hit that like button, subscribe to the channel so you don't miss our next episode, and drop a comment below. What are your thoughts on e.l.f.? Do you think the bottom is in, or is there more pain to come? Let me know. Please remember, folks, I am not a financial advisor. This content is for educational and entertainment purposes only. Investing in stocks involves significant risk, and you could lose money. Always do your own thorough research and consult with a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.